Chapter 21, Cash Flow, and now we're going to look at part 2 and we're going to go over the indirect method for doing operating activities. So again, we talk about there are two formats that are used for operating activities. Normally, the GAP wants you to do the direct method and then have a follow at the end with the indirect method. So we're going to go through the indirect method. We're going to do exactly the same problem that we did for the direct method, so we're still going to get the same answer of 404. So that's the thing to remember, regardless of direct or indirect, you should get the same answer. Now again, we're going to start with our income statement. We need both of these, the income statement and 2 years on the balance sheet, and also we need to know what the changes are. We start with looking at net income and adjust for non-cash transactions. Now, we ignore the loss on sale of cash equivalents because this is part of cash and you don't pay attention to cash at all when you're doing the indirect method. So, what we start with is we're going to take our net income of 182, and then what we're going to do is add in any non-cash transactions, which would be our depreciation expense and our patent amortization. So we're going to take the net income and we're going to adjust for those non-cash items, and we're going to add them back in because they were subtracted out of net income, but we're trying to convert that net income to cash. So now we're going to look at changes in operating assets and liabilities, and this is our current assets and liabilities. So now what we're going to take a look at is we're going to look at our accounts receivable and our inventory, which are our current assets. Remember, there is an inverse relationship when you're doing the indirect method with adjustments on current assets. You subtract increases and add decreases. Here's why. For accounts receivable, if accounts receivable went down by $12,000, what that means is you received $12,000 more in cash than you had in sales. So here's what we're going to do. We're going to add in the decrease in accounts receivable and add in the decrease in inventory. Now we're going to adjust for current liabilities. Now again, this is different. Changes in current liabilities go in the same direction as the change. You subtract decreases and add increases. So we're going to add in that increase in accounts payable, subtract out the decrease in salaries payable, and add in the increase for interest payable and income tax payable. Now we're going to show those on our cash flow from operations. And we add that all up, we get that same answer of 404. So this includes an overview of how to do the indirect method. Now we go on to Chapter 3, which will cover both the direct and indirect method and the whole cash flow statement.